We will go to the markets as we await these big events this afternoon. Dow, the only thing in the green, albeit slightly. Everything else is just a little bit red. So we did, Joe, get 7,000. We're 2 hours away from the Fed decision, a handful of hours away from Meta, Microsoft, and Tesla as we begin those mega cap earnings. You got that. You got gold and silver, which were ripping again today. The dollar is very much in focus, which was down to a 4-year low. The president saying, "Yeah, I think it's great," and then the Treasury Secretary making his comments. The U.S. always has a strong dollar policy. Okay, what do you think?
Volatility up 4.5% today. So maybe the message from that increase in volatility is what we've seen in the last several days, which has taken the market to the new highs. It's really concentrated. We've lost that broadening out narrative. It's not in play anymore. So for me personally, in the last several weeks, I've been buying energy names. I bought Twilio. I introduced further positioning in Zoom. So I'm buying over the last 10 days. Here we are today. I think it's a moment where you have to take a pause. You have to take a pause. You have to take a step back. You have to allow for the earnings to come out from the hyperscalers. Let's hear tonight from Meta and Microsoft. Remember something on those stocks. Meta is down 11% since its earnings report. Microsoft is down 10% from its earnings report. Why? It's because there is this perceived risk surrounding spending, and the reality is we need to hear tonight what the return on investment is for that spending itself. So I think the market, we achieved new highs, great, congratulations on that, but we're doing it in a very narrow capacity, and I just think it's time to maybe take a step back, look around, don't get too excited about taking on more risk.
Well, Bryn, I wish we could show this, which we had yesterday, and maybe we can, the 1 week move in some of these mega caps, because yes, they have underperformed. And if you look at them year to date, it's sort of, whatever. But if you look over the last week, many of them have been running into these prints, Meta included. And I wonder what that does to expectations heading into this afternoon when it all begins.
I don't think it does much right now, because if I actually break these charts down, Microsoft is trading below the 200-day moving average. And Scott, there's an adage, it's pretty correct, nothing good happens under the 200-day. So it would really be great if after Microsoft prints, we could get back above that. I think so many people have confidence in Satya and Amy Hood. I know I do. And I think to Joe's point, with Meta, the return on capital, they don't have a cloud business. Are they going to build one? Think about the CapEx spend there. That just seems like a really poor choice of capital at this point in the cloud cycle. And so I just think that Meta and Microsoft specifically are really under the scrutiny of investors to say, what are you doing for me? What are you doing for me? How are you monetizing? I think Microsoft's in a much better position because they do have cloud. They have so many other business units. Whereas Meta, are they going to charge for ads now or charge for premium service on Instagram? Are we actually going to do that? So I think you'll continue to see dispersion among these names all year long.
Jenny, we like when Meta reports because it's the only of the mega caps that you own. So it's our only opportunity to get you into the mix when we talk about these earnings reports and what your expectations are. Again, it was a tremendous disappointment, at least the price action in the name after the last report. And we've had a nice ramp now into this one. So what are you thinking about?
Well, just to be fair and clear, just because I don't own them doesn't hold me back from talking about them. So,
as we've learned.
So, okay, the way Bryn said it, where she said, investors are going to be saying, what can you do for me now? That's exactly where we're at. Bryn summarized it perfectly. So they're forecasted to spend $120 to $130 billion in CapEx this year, and we're watching to see if that's justified. All the rest is easy, right? They have a reasonable multiple. They trade at 20 some odd times. They have really strong earnings growth ahead. Revenues are expected to have grown 22% in the fourth quarter. So the numbers are easy. It's really exactly what Bryn said. What are you doing for me? How are you going to spend that wisely?
Sarat, there are those who think that these earnings reports bring the herd right back to the names. And that's what you've started to see in anticipation of these reports being good. Deutsche talks today about fresh highs, attention might swing back to tech, that all of these other names have stolen some of the limelight, but you're going to get the spotlight back on these names. It's very much like what Wolf is talking about today, where they say the broadening out it stops with big tech earnings because they are the catalyst to get people back into all of these names. Do you agree with that?
I do somewhat, and I think what you have to look at is, was the message received after the earnings last quarter that, hey, we're looking at return on investment, like Jenny said, we're looking at depreciation expense. That's going to be important. And also, I think there are good tells in the economy in terms of advertising and Meta. What are they going to talk about? So I think that's going to be, important. And Microsoft has a software issue, so all the software stocks are not doing well. So the question is, can they talk through that to say, hey, our recurring revenue is increasing?
I mean, if there's one software company that shouldn't be disrupted tremendously by AI, wouldn't it be Microsoft for the most obvious of reasons?
Yeah, and I think the question is, will that happen, and will they show the acceleration of their earnings, which, we're Microsoft holders, and we think of the 7, they're in the best place to grow that.
It's easy to look at Microsoft and to be able to validate the return on investment because you see the growth in Azure. Right. They have the cloud business. I don't know how you get that validation, Jenny, with Meta. Is it ad targeting? Is it engagement? How do you realize that there actually is a return on the spending? And then if you look forward, and we own Meta, okay, so we see the same things that you see over the long term, but if you look into 26, the revenue guidance, that's pretty soft for this company, coming in negative.
But this is emblematic of a bigger problem, which is like, how do you know when that 120 to 130 billion is well spent?
For Meta.
For Meta. But it's a bigger picture thing too.
I don't think it is for Microsoft.
I think that's kind of the point that Joe's raising. It seems to be.
Okay.
Hold on. It just seems to be easier to track the return on investment for some of these other names rather than a Meta. You're like, okay, we have an open model. It's like, where's this all going? We're going to be aggressive and we're going to spend, but we're not exactly sure how to quantify this return to justify the stock being where something it should go.
Fine. So if you want to be really specific, easy to measure for Microsoft. It's certainly easy to measure for a company like NVIDIA, but when I said emblematic for the bigger picture, there's a lot of spending out there, really broadly, names that aren't in the top 10 that we're talking about, and that's the challenge, we're not going to know until 27, 28, and further.